right, we're live. So I want to just cover real quickly the update to the daily S&P crude ratio. This is the number of barrels of crude oil it takes to buy the S&P index. I'll put that in quotations, to buy the S&P index. And I've been talking recently about how we've had this large move up, which means a move down in crude, move up in the S&P. And a lot of it was brought about by that massacre in Crude on right after the day after Thanksgiving. Since then, we have retraced some of the way back. We're still significantly over the 50-day and 200-day moving averages of this ratio, though. And anytime that I see the price below the 50 and the 200, not anytime, but most times when I see that setup, I'm expecting that it will start to converge toward the 50-day moving average. And we saw a big move, relatively big move today. The underlying there was crude went up. Let's whip up a daily chart here. The S&P went down about 1%, and crude went up about 2%. So that ratio compressed about 3%. Now, I don't actually think, so I titled the video here, Crude up 8% or S&P down 8%. It really could be any combination of those two, but to get us back to the 50-day moving average for this ratio, crude would either have to be at around $78, because we're about 46.50 on the S&P index, or the S&P index would have to be down just below 4,300. I wouldn't be surprised if we saw something kind of in the middle, where the S&P fell to 4,500 and crude went up to 75.60. Just yesterday, though, I was saying that crude was looking soft. I would say today, that crude is looking kind of lost. It really isn't clear to me. Like if you look even on this day, we had a big buy bar here, we had a big sell bar here. Definitely some buying interest on the 14th and 15th. You can see with these buy tails on the 4-hour chart. There was somebody that was very interested in buying crude below $70. So I think crude's kind of in a no man's land right now, between 70 and 73. And that's why I am more interested in the S&P. I still am holding out. That holding out sounds bad. I'm sticking to my my conviction that the chance of a big sell-off in the S&P into the end of the month is higher than what's currently reflected in the market and in general commentary. So anyway, that's the update on this crude S&P ratio. Once again, I do think that if you're going to be short something right now, be short the S&P. If you're going to be long something right now, be long crude. All right, cheers. Not investment advice.